Hello and welcome to Today, a daily news report where I cover all the biggest stories affecting your wallet, life, and money. All right, we're starting with the big one. Mortgage rates have just hit a new high of 7.3%. That is the highest level in more than 20 years since the financial crisis of 2008, and it's causing mortgage applications to fall off a cliff. Now, here's the thing. Rising interest rates don't automatically mean that housing prices are going to come down. This time at Walmart, the largest bricks and mortar retailer in the world. They're laying off 200 corporate employees. That's about 1% of their workforce. And they cite a challenging retail environment, which basically means they not gonna be making as much money this year as they did last year. The rest of the day is spent on meetings, emails, workplace politics, etc. Now, this is bad news because it's signaling a greater chance of a recession. In fact, it has a 98% accuracy rate of predicting recessions going all the way back to 1955. Now, some people say that this time is different. We're seeing an inversion during a time of low inflation. But as we saw with the most recent jobs report, inflation could be starting to pick up again. Time will tell. Now, this is slightly above pre-pandemic levels, but it's still way below what employers actually want. We're seeing a lot of sideways action as investors digest all the recent news. If you want to stay up to date, make sure to follow. Also, check out my video on how to save $1,000 a month. It's one of the best videos I've ever made. But when mortgage demand falls off a cliff like this, that is a leading indicator that housing prices could soon follow. Revolving credit rose by $10 billion in June, which is 5 times higher than economists expected. For anyone who wants to get a job, the job market is still red hot with companies desperate for workers. Open positions are still near all-time highs. And there's still a record number of job openings for every unemployed person in the United States. This comes at the same time that people are dipping into their emergency funds at the fastest pace ever recorded. So basically, people are borrowing more money to buy necessities, and they're redoing this at the same time they're rerunning down their emergency savings. It's kind of a double negative, if you will. Now, speaking of real estate, check out this crazy story from Florida where a man bought a house for $50,000 in cash. That was in January of 2021. 9 months later, he turned around and sold that same house for $650,000, a 12-fold increase in value in less than a year. Now, granted, this is a rare occurrence, but it just shows you that real estate can build wealth really fast if you have the right timing. All right. Next up, more layoffs are coming. Next, credit card debt is now exploding higher as people are tapping into their plastic to buy necessities. Now, despite all this bad news, there is some good news. Speaking of the job market, a new report just found that the average worker only spends 3.5 hours a day actually doing work. And lastly, the yield curve just became even more inverted. Now, as far as the markets, not much happened today. Now this is all the news that's affecting your wallet, your life, and your money.